Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market event, that is currently moving prices. We'll do some technical analysis and try to understand the current market setups. And once we do that, hopefully everyone will trade from an informed perspective. So as usual, these sessions do not represent any investment advice. They're not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So the first and topmost news for the day is from Trump, and this is concerning the current ongoing tariffs. So right now, we know that he's expecting to implement some huge tariffs on the auto sector, and that has been the biggest moving news since yesterday in the afternoon. So from the headlines, Trump announces 25% tariffs on all foreign-made vehicles and some auto parts. So President Trump made good on his promise to impose tariffs on foreign automakers, imposing 25% duties on all cars and light trucks that are not made in the US, as well as certain auto parts. This will continue to spur growth that you have never seen before, Trump said on the White House on Wednesday, signing an executive order putting the tariffs in place. The 25% tariffs are set to take effect on the 2nd of April, that's about 6 days from now, and add to existing tariffs. The White House estimates that $100 billion in annual duties will be corrected. White House Press Secretary Caroline Leavitt said Trump would make the announcement earlier today during a news briefing with reporters. Shares of GM, Stellantis, Ford, Tesla traded lower in the aftermarket following Trump making their tariffs official. BMW, Porsche, Volkswagen, and Mercedes-Benz trading in Germany dropped earlier in the day following Leavitt's news conference. Though the new tariffs will hit mostly foreign automakers, domestic automakers, including the big three, Ford, GM, and Stellantis, are concerned about their impact too. GM, Ford, and Stellantis build vehicles in Canada, Mexico, and China, and they foresee higher production costs due to tariffs' effect on the auto supply chain. Wednesday's tariffs seem to initially target only finished auto products. However, the executive order and published fact sheet added parts like engines, transmissions, powertrain parts, and electrical components to the list of foreign goods subject to tariffs. Trump has deemed April 2 the day on which he is slated to announce further tariffs, the Liberation Day, for the US, saying other countries have ripped us off and that many new tariffs are reciprocal. So as you can see, a chart here basically showing Volkswagen Group and how it has performed. Clearly, after the announcement of tariffs, most of these stickers have gone further back downwards. Apologies for that. So while the costs of new auto tariffs on foreign imports are hard to quantify, analysis from various data firms suggest price hikes of $3,000 to as much as $12,000 for non-premium autos. European automakers have suggested a range of options for dealing with tariffs. BMW said it will absorb the costs for a short time, while Porsche suggested it would pass on costs directly to consumers. In our view, these initial tariffs, if they hold in their current form, would be a hurricane-like headwind for foreign and many US automakers and ultimately push the average price of cars up $5,000 to $10,000, depending on the make, model, and price point of the particular car. Wedbush analyst Dan Ives wrote late Wednesday night. So we continue to believe this is some form of negotiation and these tariffs could change by the week. We expect to learn more over the next week, but for now, investors will be frustrated by the announcement with few details. So it's a developing story, so we'll be looking for more updates on the same. So on the economic calendar side, we know that today the main event is the US final GDP as well as unemployment claims at 3:30 p.m. So we haven't had much of news in the early morning. So key focus will be on the US final GDP as well as unemployment claims at 3:30 p.m. So for the final GDP quarter over quarter, we're expecting a similar number as per the previous reading, 2.3%. though we could be seeing a change in the actual reported number. So I'm trying to zoom in here to remove the COVID time. So here, as you can see from the chart, we have had quite a sequence of positive GDP reports, with only two negative GDP reports since COVID, being on June 2022 and the quarter ending September 2022. So in this case, in the last reading, we had the quarter ending December, and now the quarter ending March is set to be announced today, and we don't expect much of a change. So if in case we get a much higher number, let's say 2.4% and above, then 2.3% and above, that would be positive for US equities as well as for the dollar. But then if we get a much weaker GDP, then that would be negative for the dollar as well as for US equities. So as for unemployment claims, it's a much lesser data point because it's a weekly data point. So we don't expect much of a variance between the forecast and the actual outcome. So clearly notice that most of the previous reading have been below forecasts. So if you look at the forecast chart and try to understand what has been happening, then you'll notice that the small gold bars are representing the forecast versus the outcome, and a majority of them have been higher than expected. Overall, if you look at the chart, you'll notice that it has been more of a sideways momentum rather than a trending chart. So this basically means that over the past couple of months, there has been more of a sideways movement in unemployment claims. So unless there's a big variance in the outcome versus the forecast, then we should not be expecting much reaction to the unemployment claims report. So final GDP price index is expected to be the same as the previous reading at 2.4%, whereas the goods trade balance is expected to slightly improve to negative $134.6 billion. So preliminary wholesale inventories month over month is expected to slightly slow down to 0.7%, down from the previous reading of 0.8%. So pending home sales, on the other hand, are expected to be up 0.9%, turning away from a huge negative drop of negative 4.6% in the previous reading. So in this case, we are expecting pending home sales to turn right into the positive, not just the negative reading we had of negative 4.6. So in this case, an improvement and a turn to the positive by 0.9%. So there will be a sequence of data points, and we expect these to have some impact in the market. So clearly, the final GDP quarter over quarter will have the biggest impact in the markets. So outside of that, there's more developing news in the markets. So GameStop shares jumped 12% after Bitcoin purchase plans announced. So GameStop shares nearly jumped 12% on March 26. That was yesterday, after the company announced plans to purchase Bitcoin. So the company plans to finance the purchase through debt financing after markets closed on March 26. GameStop announced a 1.3 billion convertible notes offering. The convertible senior notes, debt that can later be converted into equity, will be used for general corporate purposes, including acquiring Bitcoin, according to a company statement. GameStop expects to use the net proceeds from the offering for general corporate purposes, including the acquisition of Bitcoin in a manner consistent with GameStop's investment policy. So the company revealed on March 25 plans to use a portion of its corporate cash or future debt to buy digital assets, including Bitcoin and US dollar pegged stablecoins. GameStop's cash reserves stood at 4.77 billion on 1st February, compared to 921.7 million 1 year earlier. So clearly, their cash reserves have gone up over 4 times, or we would say 400%. So clearly, if they're planning to buy Bitcoin, investors are turning net positive for the stock. And so far, we saw some good performance yesterday. So that's one of the top stories in the markets right now. So on the other side, we have Dollar Tree, retail chain in the US, offloads Family Dollar chain for $1 billion, ending a decade-long effort to find a fit. So this drove the stock higher. So Dollar Tree's decade-long effort to fold the family dollar chain into its business is ending after agreeing to sell the bargain store chain to a pair of private equity firms for $1 billion. So Dollar Tree bought Family Dollar for its over 7,000 stores 10 years ago for more than $8 billion. So clearly, the chain hasn't been very profitable for them since buying it for 8 billion and now they're selling for 1 billion. Neil Saunders, managing director at Global Data, said Dollar Tree struggled with supply chain issues, poor store locations, and other operational difficulties ever since making the acquisition. Basically, Dollar Tree bit off far more than it could chew. So, Family Dollar carries a range of household staples from food to laundry detergent. The stores are largely located in underserved urban areas. Store closings that are underway and those that may not take place under new ownership are likely to have an outsized impact on customers living in those areas. So just want to give you a quick highlight of how the stocks are performing. So clearly for Dollar Tree, it was up 3% yesterday after the announcement. So in the last 5 days, it's up 7%. And since the year started, it's still down 9%. So a majority of what we are seeing in the last 1 week is basically a recovery from an earlier sell-off. So on the other hand, for GameStop, you can see that the stock was up 11.65% yesterday. But then in pre-market trading, it basically reduced. And now we're expecting it to be down 1.63. So pre-market opening price will be down to 26.73. So in the last 5 days, the stock is up 19.92%, and the year-to-date performance, it's still down 7.5%, where a majority of the gains we have seen since the 13th of March are basically recovery from an earlier sell-off. So we could be seeing the stock turning a leaf and moving into positive territory. So I'm just checking to see if there is anything that we may have missed on the market updates. Yes, on the AI sector, there is a battle grooming between US and Chinese developers. So yesterday, the 26th of March, the US blacklisted over 50 Chinese companies in a bid to curb Beijing's AI chip capabilities. So this was a huge development. The US on Tuesday added dozens of Chinese tech companies to its export blacklist in its first such effort under the Donald Trump administration, as it doubles down on curtailing Beijing's AI and advanced computing capabilities. The US Department of Commerce, Bureau of Industry and Security added 80 organizations to an entity list, with more than 50 from China, barring American companies from supplying to those on the list without government permits. The companies were blacklisted for allegedly acting contrary to US national security and foreign policy interests, the agency said, as part of its efforts to further restrict Beijing's access to exascale computing tech, which can process vast amounts of data at very high speeds, as well as quantum technologies. So dozens of Chinese entities were targeted for their alleged involvement in developing advanced AI, supercomputers, and high-performance AI chips for military purposes, the Commerce Department said, adding that two firms were supplying to sanctioned entities such as Huawei and its affiliated chip maker HiSilicon. It blacklisted 27 Chinese entities for acquiring US origin items to support China's military modernization and 7 firms for helping advance China's quantum technologies capabilities. Among the organizations in the entry list were also 6 subsidiaries of Chinese cloud computing firm ISPA Group, which had been blacklisted by the Joe Biden administration in 2023. China's foreign ministry said late Wednesday it strongly condemns the export restrictions while urging the US to stop generalizing national security, Reuters reported. So the latest additions cast an ever-widening net aimed at third countries, transit points, and intermediaries. So Chinese firms have managed to gain access to US strategic dual-use technologies via certain third parties, he said, referring to loopholes that have allowed Chinese companies access to US technologies despite restrictions. US officials will continue to step up tracking and tracing operations aimed at the smuggling of advanced semiconductors made by NVIDIA as well as AMD. The expanded export restrictions come at a time when tensions between Washington and Beijing have been rising, with the Trump administration budgeting up tariffs against China. So, the rapid rise of Chinese AI startup DeepSeek has boosted the adoption of open source low cost AI models in China, putting pressure on leading US competitors with higher cost proprietary models. The Biden administration imposed sweeping export controls against China, encompassing everything from semiconductors to supercomputers under the so-called small yard high fence policy. The approach aims to place restrictions on a small number of technologies with significantly high military potential while maintaining normal economic exchange in other areas. So clearly, with this new set of policies against Chinese AI, we could be seeing some American companies affected. Remember, if China goes through third countries and gets more advanced AI chips, especially from NVIDIA, it promotes NVIDIA. And if the loopholes are closed, then NVIDIA makes less sales. And that is bound to affect the company as well as other AI tech companies in the US. So we'll be following more closely on that. Of course, the latest update from CNBC is that European auto shares fall after fresh Trump tariffs. Jeep maker Stellantis is down 5.2%, and this is live updates from CNBC. So outside of that, from the Forex market, we know that a lot has happened this morning with the new announcement of tariffs against automakers. We have seen the Canadian dollar being the weakest currency since this morning, whereas Asian pairs are doing particularly well, New Zealand and Australian dollar. The pound is a bit on the positive, but Swiss franc is also losing to the dollar. So for the week, the JPY is still the biggest loser, with the euro and the CHF also being the weakest currencies in the market. Whereas the Australian dollar, Canadian dollar, and New Zealand dollar have made some significant gain against the dollar. So on the month, that is since the month started, all these currencies are still in the positive against the dollar. The dollar was pretty weak on the earlier weeks of the month, with the euro and the pound making the biggest gains against the dollar. New Zealand, Swiss franc, Australian dollar, and Canadian dollar also up, with Japan with a net neutral, where the Japanese yen was largely gaining against the dollar. The dollar has recovered against the yen, and so far, month to date, they are almost at equal levels. So I'm looking at to see if there is any other updates. So from trading economics, European markets fall on Trump's auto tariffs. We already discussed that. Turkish jobless rate lowest since 2012, down to 8.2%. Finnish consumer morale remains weak. In this case, there was a slight increase to negative 8.2, which is still in contraction territory. Malaysia producer prices rise for the third month, in this case, an increase of 0.3% year on year. Dollar slips as Trump announces auto tariffs. This was the slip last night when the auto tariffs called for a market-wide panic. Taiwan consumer mood falls to 11-month low, and China industrial profits drop slightly in January to February period. So those are the key highlights in the markets as of this morning. So now I'm checking on the comment section to see if you guys have any updates and questions as we proceed. So hello and shout out to Paul Carey for being the first person to join and comment on the live session. Hello, Vic. You can see Charles Palmer in the house, Maureen, Boniface Wanjao, Rono, and Gary Patrick. Thank you guys for joining and commenting. So first question we have here is or rather comment. Good morning, Rufus. This week markets seem to be slow. It depends on which markets you're trading, because from what I'm seeing, especially from the equities market, there's a market-wide panic selling, and yesterday we had some good volatility, which I expect to see continuing in the markets today. So let's check it out. I'm going to open my MetaTrader 5 trading application. So just to give you a highlight of what happened yesterday, yesterday we had continued bullish momentum, especially on the Nasdaq, where the market was largely recovering and moving higher. But then after getting to this area here, what we saw was a widespread sell-off, and this sell-off was after the announcement of the 25% tariffs on automakers. So this led to a big sell-off, and we could be seeing an extension of the same. So right now, yes, the market is seemingly finding some level of support around this area here. You can see the attempts to bounce from here and continue with the recovery. So from the daily time frame, you can see the market-wide sell-off as a result of Trump's tariffs. Market attempted to make a recovery, and now we are seeing a very strong sell-off. So if you compare the two candlesticks, daily candlesticks between Tuesday and Wednesday, clearly this was a very strong panic selling from sellers, similar to what we had in this range here. And also after an attempt at recovery here, we had a big sell-off, though the market continued higher. So now the big question is this panic going to continue impacting the markets before the 2nd of April? And are we going to continue seeing a much weaker US equities market? So clearly, we are at a key level decision point. So at this point, we don't know if there will be a continuation or a bounce, but more likely, given the panic we are seeing in the markets, we could be seeing some further sell-off, and some further sell-off would likely mean that the markets head lower, and we continue seeing a drop towards 19,468 price action level. So for the US 30 or the Dow Jones Index, it was also on a very strong bullish momentum for the last couple of days. So yesterday turned out to be a net negative day towards the evening. So today we are seeing the Dow making a very strong recovery. So the Dow, which is an index of 30 companies, is not much affected compared to the Nasdaq and the SP 500. So good likelihood that the Dow continues with its recovery path after the big sell-off yesterday in the evening. So more chances that we see the Dow reclaiming yesterday's high at 42,770. So as for the SP 500, we had the big sell-off yesterday. So from the daily time frame, this is how it looks like. From the 4-hour chart, this is how it looks like. And from the 1-hour time frame, this is what we are basically witnessing with the SP 500. So yes, a pretty big sell-off yesterday. This was a key level resistance, now turned into a support, and the market is seemingly looking to bounce from that area. So we don't have that yet. Notice that we opened with a gap downwards. Market closed the gap, pulled back to this area, which was a former resistance, now support, and it's now seemingly bouncing from here. So we could be seeing the SP 500 getting right back on track and moving towards previous highs. And by previous highs, I mean yesterday's highs. But then also we could be seeing more panic selling, especially towards the New York session. And the market could breach this area and potentially head lower. In this case, if it heads lower, we should be targeting an area around 5,644. So Bitcoin, we had projected it would move along the channel, move towards the lower side. In this case, what we experienced was the market moving down, failing to get to target and moving back upwards. And then yesterday, a further drop, but still we are now getting into a new pattern within a pattern kind of environment, where Bitcoin is on a slightly bearish channel for the last 3 days. And now it's retesting the upper side of the channel. So clearly, we are yet to get to the lower trend line, which would imply that Bitcoin could get to the lower trend line and then bounce strongly towards the upper side. So the dollar index managed to make gains yesterday in the evening towards the end of the day. This morning during the Sydney session, it had a pullback, and now during the Tokyo session, we are seeing some strong recovery here, which implies that during London and New York, we could be seeing the dollar index remaining strong. And if that happens to be the case, then we could be seeing the majors taking some steps backwards. So from what we have seen, for instance, in the Euro USD chart, clearly we are looking at a market that is reversing. So from the daily time frame, you can see that the Euro USD was a pretty strong pair. But then, if you look at the number of days the euro has been losing to the dollar consecutively, this is 1, 2, 3, 4, 5, 6 consecutive days of the euro giving back gains to the dollar. And now what we are witnessing here is a market that bounced in the morning, got to this particular trend line, and immediately started moving further downwards. So this likely means that we continue seeing more bearish pressure on euro USD. So in this case, any attempts to retest this area here could be met with more selling towards yesterday's low. So for pound USD, yesterday we had a big sell-off, especially after the economic reports we saw, with inflation dropping more than expected. So we expected the big sell-off to extend to 1.28872. So we already got that happening, and we expected a further extension of the sell-off. In this case, to match lower prices. So a key level support area was 1.28730. And now what we are seeing here is the market bouncing off strongly right after midnight. So it made the huge drop and then bounced off strongly. So now we are seeing a net positive day since the day started for pound USD. But then at some point, we expect to see some resistance and the market pulling back downwards. So perhaps this will be happening in the New York session. It hasn't happened yet, but still the dollar is still pretty strong, and we could be seeing some more selling activity playing out later in the day. So chances are that we could be seeing evidence of sellers coming back in the markets, and then we start looking for targets around yesterday's low. So for Asian currencies, for instance, the Australian dollar, it has really gained against the dollar. So if you look at the daily time frame, it's a really big struggle to get out of the woods after clearly the Australian dollar lost by quite a percentage to the USD. And this was within a span of 4 months, losing by about 11%. So since then, you can notice that it has been attempting to make a recovery against the dollar. So clearly, from what we are seeing in this chart, which is the 4-hour time frame, you'll notice that the general direction for this chart is a bullish momentum. So in this bullish momentum, if you go to a smaller time frame, in this case, we are looking at the 1-hour time frame. We are looking at a big sell-off that happened last week, and now the market is attempting to make some form of recovery. So clearly a big struggle on AUD USD. So in this case, if the dollar remains strong, clearly we could be seeing a retest of this area here, and then potentially a jump as the Australian dollar has remained strong in the markets. Then we see if we remain in this particular pattern. So as for the dollar trading against the yen, we have been pretty insistent that after we broke out of this channel, then the direction is upwards. In this case, we're looking at the dollar gaining more against the yen or making some form of recovery. So with the next target being 151.278. So from the H1 chart, this is how it looks like. So we had the initial breakout here, a retest, and then a continuation. We broke towards the upper side, retest again, a continuation, and then we retested the support area twice. And now the market has bounced off this morning, which implies that our target is still the same. So we still expect to see 151.278 today. So for the Nikkei 225 index, after the breakout, retest, continuation to this target area here, we saw the market dropping further back downwards yesterday. And now, knowing that Japan is a big automaker and they're also being faced by the Trump tariffs without exemptions, then the Nikkei 225 index is expected to continue with a downside momentum, given the big sell-off yesterday in the evening. And today, yes, it's a bit consolidating, but at some point, we should be expecting to see some kind of a break So a breakout could be forming soon for the Nikkei 225 index. So as for gold, we had this bearish momentum playing out a couple of days ago. Then gold found some bottom around $3,000 per ounce of gold. So this bottom was on Monday. So Tuesday we started moving higher. We formed the first higher high. Wednesday was more of a sideways momentum out of noise, and then today, last day, you can see that we started with a strong bullish momentum. Yes, the market is struggling to break above this area here. Of course, you can all see it's a key level resistance area, and if we happen to break above 3,036, then the next target will be 3,047. So clearly a wait and see kind of a scenario where we expect to see maybe some noise here. Really, the markets are going to break above this area here. But then once we break, then the chances are we will be moving much higher. So given the tariffs and the impact on the markets and the uncertainty it's causing, it's adding more pressure to buy more gold, which will likely drive prices higher. So already on the daily time frame, you can see that we had 3 consecutive days moving downwards, and now we are almost getting another third consecutive day moving upwards, recovering from the recent pullback in gold. So clearly still a very strong bullish market. This is the only time we had 3 consecutive days where gold was basically losing for the month. And also, since the year started, I don't think we have had 3 consecutive days of the market having a sell-off. So this is from January. Notice that there is no 3 consecutive days. This is February, no 3 consecutive days. And of course, as we enter March, first time we had 3 consecutive sell-off. And now we are looking at the bullish momentum continuing amid stronger tariffs from US President Trump. So clearly for today, I expect some strong bullish momentum extending to the previous high around 3,047 with a potential extension into a new all-time high. So the all-time high is around here, around 3,057. So Brent oil managed to get to our target area. We had a target range here. This was the previous high, 73.461. So it was quite a struggle to get to that area there. So from the 1 hour time frame, we had all these consolidations mapped out. The market kept on pushing higher and higher, and eventually we got to our target. So now you can see the profit taking happening in real time. So if we had to choose a chart for the day, it would most likely be the Brent oil chart. After we got to this area, the market had a retest, opened with a gap, and now we are seeing more bearish momentum. So we're almost getting to yesterday's low, but most significantly, the Tuesday's low is the most significant target for the day, which served as a previous high and now a previous low. So now we could be seeing a straight up sell-off of Brent oil down to $72.017 per barrel. So clearly, after the strong bullish momentum, now we are seeing the reverse. So in this case, good chance that we see the market dropping to $72.017 per barrel, and perhaps this could be our chart of the day. So on New Zealand USD, still a significant struggle to get to previous highs. And by previous highs, I mean the last high that we saw yesterday. So yes, the market is really pushing, but the dollar is still significantly strong. So quite a divided market. But then if you look at other markets like silver, silver is showing some signs of really fading to form a significant trend since yesterday. So if I were to think of silver this way, I would say this market was moving this way, and now the volatility is thinning, but still a sideways momentum kind of market. So the overall momentum in silver is still sideways, but then we could be seeing some form of breakout playing out later in the day. Then we have European equity indices, big sell-off for the Euro Stoxx 50 index. So from the 4 hour time frame, this is how it looks like. So clearly a market that is really going down. So from what we are seeing here, we had our major resistance area here. Then the market started forming lower highs. Then you'll notice that this was a significant trend, and now the market is gunning for a previous low around 5309 for the Euro Stocks Cash Index. So there's still more room for downside momentum as the market continues with a big sell-off after Trump's announcements yesterday. So for the German 40 index, clearly a market that has been forming higher highs for the first time failed to form a higher high last week. And now this week, it seems we have already got our high in, but we don't have our low in, and the market is really moving towards the lower side. So clear sign that we could be headed much lower with a target all the way down to around 22,386. So after the big sell-off yesterday, today we are looking at a potential extension of the sell-off to around 22,386. For the Spanish stock market index, we had a new all-time high as of yesterday. So from the new all-time high, not yesterday, but on Tuesday. So yesterday didn't quite get to a new high. And now towards the evening, there was a sell-off. Today we are continuing the sell-off. So the short-term target seems to be around the Monday's low. This is 1328. So we could be seeing the market extending the big sell-off to this area here. So sorry for that. So this is the target, 13,208. Then for the French stock market index, clearly we had a big struggle after we got into a new all-time high. So the market has been pretty much mixed. This is on the daily time frame. So notice how we had a lot of mixed signals for this particular period here. So this is from late last month to the start of this month. So moving up and down, up and down. But this morning, it seems like the market is looking to extend yesterday's sell-off. So yes, there's a struggle to move down lower, but we could eventually get to this target area. We already tested that once during the current candlestick, but then could be seeing the market moving further back downwards to the same area. So for pound yen traders, you can see that the pound is making a comeback against the yen. We still have a lot to think about along these price action areas. So one of the key things to think about is the resistance area here. So clearly the market is going for yesterday's high, and from the lower side, we can say that this has been quite a trend. So after bouncing from this support area and making a strong rally towards yesterday's high, we could be seeing the market maintaining the same pattern, getting to this area here, and then pulling back downwards. So still very interesting take and watch. So we could be seeing the market retesting yesterday's high, but still remaining within the pattern. So not much of a movement here. So the last asset we'll be checking today is USD CAD. So clearly a market that broke towards the lower side here after this consolidation. Bounced from a key level support, pulled back, and now is attempting to move higher. So in this case, breakout would present a very nice opportunity to go long. So a breakout hasn't happened yet, but it could be expected, especially during the GDP news announcement later in the day, which would be expected to drive the prices to previous highs, potentially extending to 1.43714 if you happen to have a breakout during the New York session, especially after the GDP announcement later in the afternoon today. So a good question from Wangari Patrick. On the Liberation Day, how should we expect USD to perform? Weaken or strengthen? Is there a clear way of how the tariffs will impact the markets? Thinking of the case of buy rumors and sell the news. So clearly, a lot of investors are very much afraid of what might happen on April 2, as Trump is set to roll down a set of reciprocal tariffs against many countries that trade or are trade partners with the US. So since we have seen how individual sectors are impacted, case study for the steel and aluminum industry when they were slapped with tariffs by Trump. Now we have seen the automakers and how they were threatened since Trump implemented 25% tariffs on autos. We also saw it happen when he threatened 25, not 25, but 200% tariffs on European alcoholic products after they implemented heavy taxes on American bourbon whiskies. So we are seeing it case by case. And now, if all this is bound to happen on the same day, on April 2, or what they are calling Liberation Day, then the panic might start way earlier. And we have 6 days to that day. And among the 6 days, I would say that only trading days are tomorrow, and 31st and 1st. So basically, and April 2nd will be the 5th trading day from today. So this basically means that investors who are afraid that Liberation Day could cause a lot of havoc in the markets are already buying safe haven assets. And in this case, we are looking at gold being the main beneficiary of this. So we could be seeing a much stronger rally in gold, and gold claiming new all-time highs in the days going towards the Liberation Day, which is April 2. So on the side of the US dollar, tariffs have had a net effect of the dollar weakening. We had the threat of tariffs, dollar strengthening, but then once they started implementing tariffs, all we have seen is the US dollar basically weakening. So in this case, we could be seeing the dollar taking a nosedive ahead of the tariffs. And at the same time, when you look at the equities markets, and we don't know which particular sectors will be affected by the April 2 tariffs. So in this case, there is a widespread panic, and that may explain why we saw the SP 500 and the Nasdaq entering correction territory. So clearly, right now, it's not the best time to be buying the dip. Perhaps that would be after April 2nd, maybe after, let's say, the market has overreacted. But for now, there seems to be a widespread consensus that US and European stocks are not the best asset to be holding as of right now. So that's it for the day. Thank you very much, everyone. So remember, we have a new episode of the Bullish Banter podcast. You might want to check it out on FX Pesa YouTube. So sorry for that. Just want to search for it and show you the highlight. So just go to podcasts here, and then you click on
Capitals find a way to get.
So our most recent podcast, we hosted Dominic the Austrian, where we talk about Trump's impact on markets, Bitcoin, and the global economy. So you might be interested in checking out the podcast episode, and hopefully you get to learn something from it. So also, we have an event coming up. This event will be the Love and Money Festival coming up on this Saturday. So I'll be showing you a brief highlight. So on Tuesday, we did a Twitter space, which so far have had over 5,500 people tuned in and listening. So this is pinned on my profile on X, or formerly Twitter. So we have some special offer on tickets. So if you use Kahome 50, you will get a nice discount. Hopefully the offer is still there. So the Love and Money Festival will be a very interesting festival powered by FX Pesa, featuring two top podcasts. One is Financially Incorrect, and the other one is So This Is Love. And this festival will be happening on Saturday, and the schedule will be from 12 p.m. to 1 p.m. And then we'll have two shows. The first show from 1 p.m., and then the second show from 3:30 p.m. to 7 p.m. And of course, from 7 p.m. to 9 p.m., this is when we'll have some theater, comedy, and live podcast show. So if you're interested in this, you can check it out on my X profile, and hopefully that will get you set up for the big day. So that's it for the day. Thank you very much, everyone. If you don't have an account, check the links in the description below. Register for that trading account. If you are just beginning your learning journey, check out the Novice to Pro series on FX Pesa YouTube. Then hopefully from there, you'll learn something that will help you advance your trading skills. My expectations on BTC still bearish for the moment until we get out of these threats of tariffs territory, which is impacting liquidity in both stocks and Bitcoin. So we could still be seeing some more downside momentum. So given what we are seeing in the Nasdaq, SP 500, and the Dow Jones, and the relationship between these indices and Bitcoin. So hey Rufus, don't you think the DXY direction is slow due to waiting on the new month's fundamentals from the NFP and CPI data to make traders determine the true direction of the DXY? Well, the direction of the DXY is currently being influenced by Trump more than the fundamentals. So Trump is a much bigger threat to the markets, and he's creating more volatility. So with this increased volatility, this is impacting the dollar index immensely. So while yes, on one side there is the economic data, the non-farm payrolls, and the CPI and the GDP coming later this afternoon. Well, Trump is having a much bigger impact, mainly because he's impacting the bonds markets. So investors in the bonds markets are really trying to reprice their products to understand how Trump might impact their investments. This is driving the momentum of the dollar. So that's it for the day. Thank you very much, everyone, and I hope to see you on the next session.